I turned $56 into $2,500 in just one day of trading. And in this video, I'm sharing my entire scalping strategy with you. The first one is the exponential moving average. Go into the settings and change 9 to 20 because we use the 20 period moving average for this strategy. I use it in yellow. Remove the price and confirm. Second indicator, the RSI. Go into the settings and select 21 periods. With 21 periods, I assure you is much more effective, especially for the strategy I'm sharing with you today. During this uptrend, I turned $56 into $2,500. I'm going to teach you how to do the same thing. Alright, let's get started and dive into the heart of the strategy. You can see that there was a huge downward move, and after that, the market set up an accumulation pattern. And the closer we get to the end of this pattern, the more interesting it gets, because the market will either break out to the upside or continue its trend. When the market forms a low, the next one is higher than the previous low. You can see that this yellow 20 period moving average is broken to the upside by this candle. Second, rather bullish signal. And the third signal comes in here when the 50% zone of the RSI is finally broken to the upside. You can see that previously during the downtrend, during the accumulation phase, the price was below the 50% zone of the RSI, and finally it decided to move back above it. Overall, this is a bullish signal because when the market is in an uptrend, it stays above the 50% zone of the RSI. And the last signal that made me take my first trade to ride this whole trend was the breakout here of the accumulation pattern. Bullish breakout, I don't hesitate, I have all my signals, and I make my first buy here. We set the stop loss just below the last 5-minute candle. For my first target, I'm aiming for this previous market high, which forms a small resistance on the 5-minute chart. I figure the market is very likely to stall at this price zone. And it's really good for your trading capital to manage your trades this way. You can see that the market will reach its target, which is roughly around here. So that's a first winning trade, a professional trade, a safe trade. Then you see that after this rise, the market makes a correction and even breaks below the 20 period moving average here. That's a bearish signal. It's definitely a bad sign for buyers. So I'm not going to do anything. I'm not going to keep buying. You can also see here that the RSI drops back below the 50 zone. That's a second signal telling me I need to be patient and let the market do its thing. And actually, you'll see that during this whole period, inside the green rectangle, the market will move sideways. It'll hover around the moving average. Around the 20th, it'll move around here near the 50% zone of the RSI, but without ever making any real decisions. So this is a period where you do nothing, and with patience, finally comes a bullish candle. Right here, you can see it. It's going to break back above the 20 period moving average strongly. The RSI here is also going to move up sharply. It's going to move away from the 50% zone. So we have an excellent signal because with this candle, we're also going to break through the previous high, which was right here. That high had formed a small correction and we expected that when the market came back to it, there would be some resistance. That's a very strong buy signal. So I don't hesitate and I take my second trade. And for the target, we'll aim for about this previous zone. We'll place our target roughly in this area. And here you can see we have a risk reward ratio of about 1.8, almost 2. So that's excellent. We're more than happy to take this trade. We go long, and as you can see, 10 or 15 minutes later, the market easily hits our target. Let's keep going. I'll explain the next trades to you. You can see that, as usual, after a rise, there's always a little downward move. It breaks below the 20 period moving average again. The RSI here also dips a bit lower. So after taking profits, here, just like before, we wade through this whole area. We just wait and do nothing. And when the market forms its bottom, we let the Japanese candlesticks play out and wait for it to break above the 20 period moving average here again. Once it breaks above the 20 period moving average, once we get back above the 50% level on the RSI here, we can buy again. That's another buy trade with the entry price set. We set the stop loss just below the previous low. And for the first target, we'll aim for this wick here. And you can see that the market will hit our target here without ever threatening our stop loss. You see, the market doesn't even come close to threatening the entry price. So this is an excellent trade, a safe trade, a trade that's supported by the 20 period moving average. You can see that the market is generally bullish, but there aren't any big impulsive candles either. And it's a pretty calm uptrend. What I did next was wait for new highs. So you have a new high here, which is higher than the previous high. And actually, once I see this pullback here, I see there's a strong bounce off the 20 period moving average. And I see that here on this 5-minute candle, we're about to break through. So this little resistance, this previous high, same thing, it's a buy signal. Knowing that the market is still bullish, I'm feeling confident. I wait for the 5-minute candle to close and I place my new trade here. The stop loss will set it at the level of the 20 period moving average. And we're going to aim for a risk reward ratio of 1.8 to 2 times. Here we have a risk reward ratio at 2 to 1. You let the market do its thing and you can see here it's going to hit the target. The last trade is right here. You can see the market is going to come and test it. The 20 period moving average, but still well above the 50% zone of the RSI. And actually, when the market gives this bullish impulse candle, I'm going to take another buy at the close because I figure the momentum is still there and we've been in a strong uptrend for a while now. So I'll take one last trade here, again aiming for a 2 to 1 risk reward. You can see that once again it hits the target here. That's how, with just a simple moving average, a basic RSI, and a good reading of Japanese candlesticks, you can have a very effective scalping strategy. When a trend starts to form in the markets, it's important to follow it. It's important to know when to buy, where to set your stop loss, where to set your targets, and how to read the charts. And you can see that it works really well. You can turn $50 into $2,500 without any problem, with a good strategy and a solid understanding of price action.